Hello everyone, this is Grace here. So in this video, we will be discussing about the problems from the chapter process costing. So let us get into the first problem of this chapter. So in this problem number 3.1, a liquid medicine passes through three processes during the month of January 2004. 600 glass bottles were produced from the following details. Prepare process account. So they have given process X, process Y, and process Z, and they have given materials rupees 400 for X, process Y 2000, process Z 1500. Labor for process X 3000, for process Y 2500. Then 2300 for process Z. Direct expenses 600 for X, 200 for Y, 500 for Z. Cost of bottles nil for X and 2030 for Y. For process Z it is nil. And cost of cogs nil for X, and for process Y it is nil. For process Z it is 325. Then they have given your indirect expenses were 1600 in process Y. The byproduct were sold for rupees 240. In process Z the residue was sold for 125.50. So they've given information of a liquid medicine which passes through three processes to finish into a finished product. So first process where it is undergoing is process X, process Y, and process Z. So in this process, it's asking us to prepare the process account for each and find out what is the cost of the cost which has been incurred. So in this process Z, the residue was sold for 125.50. So the product was sold for 125 rupees. So now let us get into the problem. This is a solution. So it is assumed that indirect expenses are apportioned in the ratio of labor. So here they have given the labor. So there's indirect expenses were 1600, but they have not stated how is it been apportioned. So you need to assume that these indirect expenses are always apportioned based on your labor rates. So your labor amount is how much? Your 3000 for X, 2500 for Y, and 2300 for process Z. So you will take the proportion of it and you will calculate the indirect expenses to all the three process. Okay. Next, in the process Y, a byproduct were sold. So in this process, byproduct 240 was sold. So we'll consider this in your process Y account. So now first we will calculate your process X account. So this is your process X account. So process X account, you will have inputs, amount, outputs, and amount. So particulars, amount, particulars, amount. So your debit side will be all your inputs which you're using for manufacturing the product. Your credit side is all the transfers or all the outputs or sales, anything made which is going out of the process will be recorded in your credit side. So now according to process X, what is the expenses is process X material 4000. So we will consider material 4000. Then we have labor 3000. So we will consider labor 3000. Next we have direct expenses 600. We will consider direct expenses 600. So your indirect expenses to be proportioned. So we are going to proportion indirect expenses based on your labor. So your labor is 3000, 2500, 2300. So we need to remove all these zeros. So when we remove zeros here, it becomes 30, 25, and 23. So this cannot be further simplified. 30 and 25 can be simplified with 5 tables, but 23 is not possible. So we will assume it to be 30, 25, 23. So based on this 30, 25, and 23, we will apportionate the indirect expenses. So how much is your indirect expenses? 1600. So your total of 30, 25, and 23. So it will be 78. So 30 plus 25 plus 23 will give you 78. So now you will apportionate it. So how much is your indirect expenses? 1600. So which is 1600 as mentioned in the question. So 1600 into 30. As for X it is 30, 25, 23. So in 2600 into 30 divided by 78. How did you get 78? The total of 30, 25 and 23 will give you 78. So 1600 into 30 divided by 78 will give you 615. So it will give you 615. So that is the calculation of your indirect expense. Then in your credit side, do you have anything? Just look into the question. Is anything being gone out or sold out, which is going out or moved to the warehouse? There's nothing being stated like that. So the process X ends here. So the balance of your process X will be the input for the process Y. So the total of it is how much? 8,215. So 4,000 plus 3,000 plus 600 plus 615 will give you 8,215. So this total will be recorded in your credit side, which is an output, and it becomes input for process Y. So by transfer to process Y's account, how much is the total? 8,215. So this output will be the input for process Y. Because it is a continuous process, only when you come to process side it will complete the process and finished stock will be prepared. So now how much you are transferring? 8,215. So now you prepare your process Y account, particulars amount to transfer from process X. So from where you are receiving this amount? From process X. So to transfer from process X, 8,215. So next you will record all the inputs which is present in process Y. So inputs are material, which is 2,000, labor 2,500, direct expenses 200. So you will be recording your material, labor, direct expenses 2,000, labor 2,500, direct expenses 200. Then you have indirect expenses to be apportioned. How much is your indirect expenses? 1,600. Out of 1,600 you apportioned X's part and you have calculated it. You have got 615. Now Y's part. How much is Y's proportion? 25. So your indirect expenses is 1,600 into 25 divided by 78 will give you 513. So that is your indirect expenses. So next you have, just check in the question, do you have anything else? Yes, cost of bottles. So they have bought bottles for what? This is a medicine industries where it needs to fill its medicine in the bottle. So this is your expenses. So it is your input for your expense is nothing but your input which you are using for manufacturing the product. So 2030. So for Y it is how much? 2030 to cost of bottles. So now you need to check, is there any output gone out of Y? Yes, in the question they have stated, in process Y, the byproduct were sold for rupees 240. So I've told you all what is byproduct. Byproduct is when you start manufacturing a process, might be the remaining particles or the unused particles of that product can create a byproduct. So anything which is generated out of the main product is called as a byproduct. So out of that byproduct they have sold and they have got 240 rupees. So in which process they have got this? In process Y. So it is a sales which is going out. So you will record it as by sales of byproduct. How much is it? 240. So it is stated it is 240. So you will consider it as 240. Then now you will add up your input as you have one output here. So total of this minus 240. Total of this is 8,215 plus 2,000 plus 2,500 plus 200 plus 513 plus 2,030 will give you 15,458. 15,458 minus 240 will give you the remaining amount which is to be transferred to your process Z. So by transfer to process Z is 15,218. This is your balancing figure here. So how much is it? 15,218. So this output will be an input for your next process, which is process Z. So now we will prepare the process Z account. Process Z account, you have inputs and outputs. So let us look into the input. The first input will be the money or the expense amount which you are receiving from process Y. So how much is it being transferred from process Y to Z? 15,218. So to transfer from process Y, 15,218. Next, other expenses to be recorded. So if you look into the question, material is how much? 1,500, which is considered here. Material 1,500. Then you have labor. How much is it? 2,300. So labor 2,300. Then you have direct expenses, which is 200. I'm sorry, direct expenses is which is 500. So which is recorded here as 500. Next you have indirect expenses, that is a portion based on the labor. So how much is your labor? How much is your direct expenses? Indirect expenses, it is 1,400. So I'm sorry, 1,600. Your indirect expenses is 1,600. So you're apportionating based on the labor or wages. So how much is it? So for Z it is 23. So 1600 into 23 divided by 78 will give you 472. Next, the total of it. Then we need to check, is there any other cost incurred. So just look into the problem. Yes, you have cost of corks. So to close a glass bottle, you need a cap for it, isn't it? So they are using corks here, where it is used for closing the, it is like in order to close the bottle, a cap kind which is used to close the bottle, which is inserted into the bottle for tight for the tight placement, so that medicine will not be poured out. So now cost of COX is 3,325. So it is also an expense. So you will record it as to cost of COX 3,325. Then do you have any sales in this process? Just check. Yes, in the process said the residue was sold for rupees 125.50. So they have told in process Z a residue, that is a medicine was sold for rupees 125. So let us take into consideration by sales of residue 125.50. Now calculate, you will get a difference in your credit side, which is nothing but your finished stock. So the total of 15,218 plus 1,500 plus 2,300 plus 500 plus 472 plus 325 will give you 20,315. Out of 20,315, you would minus your sale of residue, which is 125.5. So what is your balance to be transferred to your finished stock account? So the difference is 20,315 minus 125.50 will give you 20,189.50. So this is your balancing amount, which will be transferred to your finished stock account. So this is how we are going to prepare your process account. So this is a basic problem. In the upcoming problems, you will learn about your normal losses and abnormal losses. So next problem, what we're getting into, will have your normal loss calculations. So let us look into that question. So this is your problem 3.2. So here a product passes through three processes to complete during the quarter ending 31st March 2008. The cost and productions were as under. So here they are given a total column, they are given processes. So here they have given the processes, they have given the total, they have given A, B and C. So now direct materials, direct labor, direct expenses, production overhead, normal loss in input, sale of scrap per unit, production in units. And they have given total A's expense, B's as well as C's. Then they have stated normal loss in input is 10%, 5% and 10%. So sale of scrap per unit is rupees 30, rupees 50, rupees 60. Then production in units. So they are producing 920 units, 870 units and 800 units here for C. 1000 units of rupees 50 per unit were introduced to process A. There were no stock of materials or work in progress in any process department at the beginning or end of the period. Production overhead is allocated to each process on the basis of 50% of direct labor cost. So prepare process account. So here they have asked us to prepare process account for ABC, and they have given the expenses. Along with that, they have given normal loss and sale of scrap. So what is normal loss? Is a loss where it is unavoidable by the manufacturer. So the amount of loss which cannot be avoided because of the nature of material or process in the is normal process loss. Such loss is quite expected under normal conditions. It is caused by factors like chemical change, evaporation, withdrawals for test or sampling, unavoidable spoiled quantities, etc. is called as your normal loss. So what is normal loss in short is it is a loss which is known by the manufacturer early or which cannot be avoidable. It is like fixed that this loss will be incurring in the manufacturing process, that can't be controlled. It can be to an extent. The manufacturer will always know that this loss can be occurred, so he'll make sure that the certain percentage of the loss will be considered in his production. So this is unavoidable. Normal loss is something like unavoidable losses. So they have given examples like chemical change, evaporation, as I've given an example in your theory explanation of process costing, where if you're using petrol as your raw material, or you're adding petrol to produce any product, then if you're bringing petrol from one place to the other, if the container is not closed tight enough, then there is a problem of leakage or evaporation of petrol. So this is unavoidable, you can't do anything. So it is like any whatever you do, there will be a chance of being lost in it. So it is quite expected under normal conditions. So you can't for example because of natural calamities, you get products from one place to the other, you get the raw materials. You can't ascertain that this loss can be controlled by natural calamities. Might be a flood, or might be anything which causes damage to the raw material. So this loss is known by the manufacturer and which is unavoidable. So if this loss incurs, a certain part of that loss also can be sold. When we are selling a certain part of the loss, it is known as sale of scrap per unit. It is known as sale of scrap. So in this, they are telling you product A has 10% loss in the input. So your input is nothing, 1,000 units. So 1,000 units of rupees 50 per unit were introduced to process A. So that is your input, as it is been introduced for your first process A. Out of 1,000, 10% is normal loss. Then the remaining out of that 5% is charged. So then the remaining from process B, the amount 10% will be charged. So now let us get into the problem. So this is process A. So how much is the units introduced? 1,000 units, and they've given the cost per unit. What is it been stated? Rupees 50 per unit. So 1,000 into 50 will give you 50,000. 50,000. Next, what are the expenses in the problem? Direct material, which is 20,000 for A. So we will take 20,000 direct materials for A. Then direct wages, which is 30,000, and direct wages 30,000 is been considered. Then direct expenses is how much? Direct expenses is 5,000. 5,000 is considered in the problem. Next in the problem you have production overhead, which is 60,000. They have given as the total. Look into the adjustment if they have stated anything how it to be apportioned. So if you look into here, production overhead is allocated to each process on the basis of 50% of direct labor cost. Okay, 50% on the basis of 50% of direct labor cost. So here, how much is your direct labor cost? So here 30,000 is your direct labor cost. So out of 30,000, so how much is your direct labor here? 30,000. So 50% of your 30,000 will be your production overhead. So 30,000 is direct labor. 50% of it is 15,000. Okay, 15,000 for A. Then 40,000 is your direct expense. I'm sorry, direct labor. 50% of your direct labor will be your production overhead. So 40 into 50% will give you 20,000, which is 20,000 is your production overhead for B. Next, 50,000 direct labor is for C. 50% out of it will be your production overhead. So 50% of direct labor of C is 50,000 into 50% will give you 25,000. So 25,000 will be your production overhead. So 15,000 for A, 20,000 for B, and 25,000 for C. The total will give you 60,000. So the apportionment is done. So let us take 20,000. Let us take 15,000 here. So direct your production overhead is 15,000. So how did you get 15,000? 50% of your direct labor or wages. So your direct wages for process A was 30,000. So 30,000 into 50% will give you 15,000. Next, you have your normal loss. So loss is something which is going out. So out of they have stated in the question that your normal loss is 10%. So 10% is your normal loss out of your input. It has been normal loss in input it is. So 10% of your input. So your input is how much? 1,000 units here. So out of 1,000 units, normal loss is 10%. So 1,000 into 10% will give you 100. So now 100 is your normal loss. Then they have given the amount for the normal loss will be defined here by they will be given in the problem. So we look into the question, scrap. So anything after the loss which has been sold, portion of it might be good and it has been sold. So for how much is it sold? For 30 rupees. So how much is your normal loss? 100 units. So 100 into 30 will give you 3,000. So 3,000 of normal loss can be regained if you are selling, if the scrap value is given in the problem. So next is, we need to check if there is anything remaining. So 1,000 is your input. Then normal loss is your loss is 100. So anything is just remaining in the question. Look into the question. So there were no stock of materials or work in process in any process department at the beginning or end of the period. So production overhead is allocated to each process on the basis of 50% of labor cost. Then they have stated production in units. So for A, production in units is 920 units. So the input was 1,000 units, but the production what they have done in A is 920 units. So the output, that is nothing but production in units, in the sense A is produced, so it has an output of 920 units. So here we will consider by transfer to B. So process A is producing and giving 920 units. So we will consider 920 units. So what is the cost per unit? So 920 into 50. I'm sorry, 920. The cost per unit will be calculated as follows. So out of this 920 units which is being transferred to the next process, so we need to calculate the amount. So how did we get this amount is, so before getting the cost, let us look into the input. So if you look into the input, we have 1,000 units introduced, then we have normal loss which is 100 units, then we have as per the question, the units which has been transferred to B is 920. So now 1,000 units has been introduced. So we have stopped calculation accounting only till production overhead. We have written it. So now 1,000 we have 100 here and we have 920. So 1,000 minus, if you look into 1,000 here, if you add 920 plus 100, the total will give you 1,020. So the output is 20 rupees, 20 units more. So input was only 1,000, but out we have got 20 units more. That is, so what is that 20? The 20 is nothing but abnormal gain. So when the inputs is less than the output number of units, that difference is called as abnormal gain. So you will also have abnormal loss. When is it called abnormal loss? Is when your inputs are more and your output is less. So this is your input, your debit sides are your input and your credit sides are your output. So when your input units are more than your output units, then that difference is known as abnormal loss, which will be recorded in your credit side or in your output side. But when your output units are more, here if you look into here, 100 plus 920 will give you 1,020, which is more than 1,000. So that difference, the 1,000 minus 120, 1,020 will give you 20. So that difference is your abnormal gain, which you will be recording it in your input column. So 2 abnormal gain, which is 20 units. So 1020, the total of 100 plus 920 will give you 1020 minus 1000, that is your abnormal gain what you have gained here. So which you will have 20 units. So how to calculate the amount for abnormal gain is, so you have formula to calculate the amount for abnormal gain as well as the loss. It is the same formula. So what is that formula is cost per unit abnormal loss or gain calculation. Cost per unit is equal to total cost minus value of normal loss divided by units introduced minus normal loss units. So what is your total cost in this problem? For process A, the total cost is how much? 50,000, 20,000, 30,000, 5,000 and 15,000. So till here is your total cost. So this total cost minus your minus your value of normal loss. So what is your value of normal loss? So value of normal loss is nothing but your 3,000 for 100 units. So how much is your normal loss amount? Which is 3,000. So 1,20,000 is your total cost. When you add up 50,000 plus 20,000 plus 30,000 plus 5,000 plus 15,000 will give you 1,20,000. 1,20,000 minus 3,000 will give you the amount, that is, this is your total cost minus your normal loss value, which is 3,000, divided by what is the formula? Divided by units introduced minus normal loss in units. So how much is your units introduced? Units introduced is 1,000 units. How much is your normal loss value units? Which is 100. So 1,000 minus 100 will give you 1,20,000 minus 3,000 will give you 1,17,000, divided by 1,000 minus 100 will give you 900, which will give you 130. It is rupees 130 per unit. So how many units are there in abnormal gain? 20 units. So into 20 will give you 2,600. So 2,600 is the value for your abnormal gain amount. So now your total input column will give you 50,000 plus 20,000 plus 30,000 plus 5,000 plus 15,000 plus your abnormal gain which you have calculated now 2,600 will give you 1,22,600 as the cost. Then your units is 1,020. So now your normal loss cost is present here. So 1,22,600 minus 3,000 will give you the difference, which is 1,19,600. So the difference of your input and output will be the amount which is to be transferred to your process B. So the difference what you get is 1,19,600. So 1,19,600 600 and units is 920 units, which is to be transferred to process B. So this will be transferred to your process B account. So when we are preparing your process B account here, so to process A, so the amount which has been transferred from process A is how much? 920 units. So how much is the amount? 1,19,600, which has been considered here. Next, we need to record all the expenses for process B. So look into the question. Process B is, you have 30,200 direct materials, 40,000, then direct expenses 2,260. 30,200, 40,000 and direct expenses 2,260. Then your production overhead will be your production overhead as per the question, which is 50% of direct labor hour. So direct labor hour is how much? 40,000. 50% of that it will give you 20,000. So you will be considering 20,000 here. So production overhead is how much? 20,000. So do you have normal loss in the problem? Yes, they have told 5%. So how much is your input here? 920. So 920 into 50 per, 10. What is the normal loss percentage? Normal loss percentage is 5%. So 920 into 5% will give you 46. So 920 into 5% will give you 46. So your normal loss is 46 units. So the cost is given in the question. So the cost which is given in the question is rupees 50 as a sale of scrap per unit. So how much is your scrap which is sold, which is 50. So 46 into 50 will give you 46 into 50 will give you 2300 is your normal loss units. Next you need to check any other things are present in your question. So out of your normal loss you have considered everything. Next is your production in units is 870. So B is producing 870 units when in the production process. So your output will be by process C. So how much are you going to transfer to process C? 870. So now you have only 46 and 870 units. So 920 minus 46 and minus 870. So if you look into this, your 920 is greater than your 870 and 46. So 870 plus 46 will give you 916, but here you have 920. So your inputs are more than your outputs. So as I've told, when your input units are more than your output units, you will get abnormal loss. So 920 minus 870 plus 46, you will get 4 units. The balance will be 4. So the difference what you get here is 4 units. So that is known as your abnormal loss. So how much is your abnormal losses? 4 units. So how to calculate that? The same formula which will be. So now how to calculate this abnormal loss cost is by using the formula. So what is the formula is? The formula is total cost minus value of normal loss divided by units introduced minus normal loss units. So what is your total cost? Total cost is 1,19,600 plus 30,000 plus 40,000 plus 2,260 plus 2,000, I'm sorry, plus 20,000. So as we calculate 1,19,600 plus 30,200 plus 40,000 plus 2,260 plus 20,000 will give you 2,12,060. So this is your total cost. So 2,12,060 minus your normal loss. So how much is your normal loss cost, which is 2,300. So 2,12,060 minus 2,300 divided by units introduced. So how much is your units introduced, which is 920. So 920 minus your normal loss units. So how much is your normal loss units? 46. So minus 46. So 2,12,060, which is your total cost, minus normal loss amount, which is 2,300, divided by number of units introduced, which is 920, minus 46 normal loss units will give you 2,12,060 minus 2,300 will give you 2,09,760 divided by 920 minus 46, which will give you 874. So 2,09,760 divided by 874 will give you 240. So 240 cost per unit. So how many units are there? As normal loss, 4 units. So what is the cost per unit? As per the calculation what we have got is rupees 240 per unit. So 240 into 4, you will get 960. So how did you get this 960? 240 into 4 units, you will get 960. So now your total cost of your input minus your output normal loss, which is 2,300 minus 960, you will get 2,80,800. So 2,12,060 minus 2,300 minus 960, the difference is 2,08,800. So that is your amount which will be transferred transferred to your next process. So which is your next process? Process C. So let us get into your process C. So this is process C account. So process C to process B, how much has been transferred from process C? I'm sorry, process B, 870 units. So 870 units, and what is the cost? 2,08,800. So 2,08,800 it has been carried from process B. This is your input. Then you have direct materials from the question. Direct materials how much? 34,620 and direct labor is 50,000. So direct material 34,620, direct labor 50,000. Then your production overhead is 50% of your direct wages. So 50,000 into 50% will give you 25,000. Then you have abnormal loss in the problem. So how much is your abnormal loss? Or loss is 10%. So how much is your input? So input what you have got is 870. So 870, 10% is your normal loss. So 870 into 10% will give you 87 units. So the 87 units for this value, have they given the scrap value? Yes. In the problem they have given sale of scrap per unit is rupees 60. So your normal loss is 87. Your normal loss is sold at a sale of scrap which is 60 rupees. So 87 into 60 will give you 5,220. So that is what you've written here. So next you have introduced amount and you recorded the expenses. Then you have your normal loss. So your 870 minus 870 is your input. Then you have normal loss of 87. Look into the question. Have they given the output for that process? Yes, they have told C is producing 800 units. So that is the output for that process. So you have output also given. So you will write, as this is the last process, you will write by finished stock is 800. So 87 and 800 is the units which is present in your output. Now you will check whether your input units are more or your output units are more. So your 870. So till production overhead only you have recorded. So please remember, don't consider the last line, only till production overhead you have recorded. So 870 is your units which is present in your input. Then here you have two normal loss units as well as finished stock units, which is 800 plus and 800 plus 87. So 870 in input and 887 in output, which is more than your input. So when your input units are less than your output units, that means your output is more. When your output is more, obviously there is a abnormal gain. So please remember always, when your output units are more than your input units, you will have abnormal gain. If your input units are more than your output units, then you will have abnormal loss. Your abnormal gain will be recorded in your debit side, whereas your abnormal loss will be recorded in your credit side. So in this problem, your input units is 870, whereas your output units, what you have got, 800 plus 87, which is 887, which is more than 870. So you have your abnormal gain. So you will be recording 2 abnormal gain. How much is your abnormal gain? 887 minus 870 will give you 17. So 17 units is your abnormal gain which you have gained here. So 17 is your abnormal gain. So how to calculate it? The same formula which has been introduced. So total cost minus normal cost. So normal loss cost divided by number of units introduced minus number of normal loss units. So minus number of normal loss units. So let us calculate your total cost. So your total cost calculation is 2,08,800 plus 34,620 plus 50,000 plus 25,000 plus 25,000. So till 25,000 is only your cost. They have asked total cost. So only till 25,000 is your cost. So you will get 3,18,420. So in that you will minus your normal loss cost as per the question. How much is your normal loss cost as per the question? 5,220. So minus 5,220, which will give you 3 lakh 13,200. So this is divided by number of units introduced minus normal loss units. So number of units introduced is how much? 870 minus normal loss units is how much? 87, which will give you 783. So the numerator is 3,13,200 when the denominator is 783. So 3,13,200 divided by 783 will give you 400. So it is rupees 400 per unit. So how many units do you have in abnormal gain? 17 units. So 400 into 17 will give you 6,800. So that is what you have got here, 6,800. So you have got your abnormal gain. So total up your cost plus your abnormal gain, you will get 3,25,200 minus your normal loss cost, which is 5,220. You will get your balancing figure, which is to be transferred to your finished stock, which is 3,20,000. So this is how you will calculate your process account. So thank you everyone. Please calculate the problem. Please work out the problem. So we'll look into the next upcoming problems with new adjustment in your next video.